Hi, Dad. How can I avoid the IRMAA surcharge?
I see this mistake happen to retirees all the time. And I want to make sure that you don't make this mistake because if you do, it could cost you thousands of dollars and it's totally avoidable. Now, let's say you're working and working, and you finally retire at age 65 or older and you do all the things. You make sure you pay down your debt. You make sure you build an emergency reserve. You assess your investment portfolio. You're good to go. You enroll in Medicare. And then you get a notice from the Social Security Administration and Medicare that says you now have to pay an additional surcharge on top of your base Medicare premiums. An additional surcharge that you didn't plan for just because your income has reached certain thresholds. Now, this additional surcharge, it could be an additional $75, $80 a month. It could be an additional $100 a month on top of your base premiums. And this is per beneficiary. So if you're married, your spouse, he or she would also have to pay that additional surcharge. Now, this is a cost that maybe you weren't planning for. But look, you may not have to pay it. A lot of beneficiaries, a lot of retirees just say, okay, well, I guess that's it. I guess that's how Medicare works. I have to pay it. No. You can appeal. There are life-changing events, 7 of them, that qualify for an appeal so you can get that surcharge, you can get that wiped away. The number one, the most common exception is work stoppage. It's retirement. It is retirement. Because what the Social Security Administration does when they're looking at your income to decide whether or not that surcharge applies to you is they get your tax return from the IRS, but not in the year that you retire. That's not the number, that's not the income that they're looking for. They're looking for the income from the 2 years prior. So if you retire in 2024 at age 65, they're going to look at the tax return from 2022. Excuse me, 2022, 2 years prior, the 2022 return that was filed in 2023. Now that can be confusing, but just remember that they're going to look 2 years ago at that income to see if you reach certain thresholds so that they can apply that IRMAA. But if you retire, you can say, look, I don't make that anymore. That was 2 years ago. I don't have that income anymore. And how do you do that? You file SSA Form 44. So let's take a look at that form, just so that you're clear, so that you're not paying these surcharges if you don't have to. You don't have to accept that. You can appeal, and you appeal by mailing and submitting SSA 44. So looking at SSA 44, look, these are the income thresholds. Mailing, filing jointly. If your modified adjusted gross income is over $194,000 you're paying an additional $70, $65, let's call it $66. Let's call it $66 per month. Per month in your Part B premium. So you got to pay the base amount, which is, let's call it about $174, $175 or so for 2024, plus $65.90 for Part B. Plus, for Part D, for prescription drug coverage, you're going to pay an additional $12. If your income is in this range, you're going to pay an additional $360. Married, filing jointly, you and your spouse are going to pay $360. So that's an extra $720 per month just in Part B as a result of that surcharge, plus an additional $70 per month for each of you. Additional $140 in Part D. Like, that could get expensive. You don't have to pay. If you retired, look at these life-changing events. Marriage, divorce, death of your spouse, work stoppage, work reduction, loss of income producing property. All of these. This is yours. This is what you would click. This is what you would select. Work stoppage. This is retirement. So you don't have to accept that IRMAA surcharge. You can click work stoppage. That's retirement. Say, look, I don't make that much anymore. I don't need to pay that. I shouldn't have to pay the surcharge. And you fill out this form SSA 44. And then they will reconsider that IRMAA surcharge. And if it's one of these life-changing events, work stoppage, for example, for retirement, again, that's the most common, then you don't have to pay that surcharge. You could save yourself thousands of dollars. So make that decision. You don't want to have to pay all this extra money, especially in the beginning of your retirement. That could be detrimental. Keep that money, use that money, save that money, grow that money. Don't pay that money to the Social Security Administration, right? Don't pay that to the government if you don't have to. You can easily wipe that surcharge away if you have one of these life-changing events. Now, one thing I will say though, if you sold a house and that's the reason your income is higher, if you sold some stock, like those are not life-changing events. Those are not. Retirement though, that does qualify. So don't lose sight of this. And that IRMAA surcharge, it's reassessed every year. Every year it's assessed. So make sure once you're planning for retirement, once you enroll in Medicare, if you get that notice, think about these life-changing events. Don't just accept that surcharge, fight that surcharge. Because I want to make sure that you have the retirement that you dreamed of, that you aspired to. You only get one chance at a successful retirement. Choose wisely.
I got it. That makes sense, Dad.